And some investment ideas for your portfolio. Dale Smothers is with us, President, CEO, RDS Wealth Management. Thanks for being here. How do you feel? I mean, look, we had a tough time since the election to inauguration. In fact, I was reading this morning saying this period and this selling may be the worst, since 2009, I think it said, from the election day to now inauguration day. So there has been some volatility. Is there opportunity now?
Sure. Nicole, there's more of the same that's headed this way in 2025. More volatility is here to stay until what we believe will become a correction that's overdue. You know, if you try to make heads or tails of what this market's going to do based off of the most recent data, you've got a mixed bag. You're looking at a CPI report that came back right around expectations, but it's still way higher than the Fed wants to see it. You've got a jobs market that is weak, not falling off of a cliff by any means, but weaker than expected. The S&P 500 still maintains a very high valuation when we look at forward PE valuations at over 22 times earnings. This volatility is here to stay. I think we've got a correction that is overdue. And again, the last 2 years of the S&P 500, historic run with no correction in sight of over more than 10%. I think that comes this year as we see the S&P 500 bounce between restraint and support.
So do you keep cash on the sidelines? Are you waiting for the pullback? Or do you feel like you want to be fully invested?
Sure. All of this depends upon your plan. If you've got money that's already at play, I think it's a good time to move it to a little bit of safer territory. You know, we're big fans here of defined outcome ETFs. They're maybe buffered ETFs is their more common name. Something like PJAN that gives us downside protection for the next 12 months, still gives us a lot of upside participation if the market continues to climb. However, if you've got money that is on the sidelines, or maybe you're wanting to take part in this rally and you haven't had any money at work right now, cash is not a bad option. Find a good money market fund like SWVXX. Wait 6 months and see what happens. But be ready to buy when we see a 10 to 15% correction, because it's coming. If you're a trader in the short term, you want to buy these dips. You want to buy these dips. You want to buy the rumor, and then you want to sell the news, especially with new administration coming out, tariffs on the horizon. You've got inflation that will certainly come back in the news. We talked about that before on the show. You know, this soft landing has still not come to fruition, and it very easily could become a balloon landing. So there's opportunity as a trader, but if you're a long-term buyer, cash is not a bad option right now.
All right, so PJAN, people can write that one down. Also, you said in the near term, you do think tech still has some room, right? I mean, you're watching names like NVIDIA, Apple, Amazon. Tell me about those names. Do they have some upside potential, 5%, 10%?
5% is certainly doable. A 10% is also doable in a company like Amazon. You know, I heard today rumors, again, you maybe buy the rumor and sell the news, but I've heard that Amazon is maybe in the running for TikTok, right? So who knows? Who knows what happens if something like that takes place? You could see a ton of upside potential in a stock like Amazon. Amazon is a household name. I wouldn't consider it a staple, but it's certainly not as dependent upon technology as, say, like NVIDIA. I like NVIDIA, I like Apple, I like Amazon in the Mag 7, still has room to run. And you're going to see companies like Raytheon and Lockheed Martin be favorable places to put some money as this market volatility takes place. Again, maybe buy the rumor, sell the news.
So you said look into aerospace and defense. You mentioned Raytheon and Lockheed Martin. So explain to me how you would use these A&D names. Would you just buy them and hold them, or are you buying on weakness? How would you use these aerospace and defense names exactly?
You've got it, Nicole. You're buying on the weakness. Buy the dips. They're good long-term names if you are a long-term player. But I think that as we see a new administration coming in, and his stance on making America number one, you're going to have the opportunity to make some money in these things simply because of a ramp up in our aerospace and defense. and potential war. This talk of war or breakout of war in the Middle East or in Europe only helps these names that we've mentioned.
And where do some of the consumer staples, the go-tos, I mean, everybody can go to McDonald's and probably find something to eat,
Sure.
though I think they may have gotten rid of the salads. But anyhow, you know, Coca-Cola, Walmart, McDonald's, that has somewhere in a portfolio, too, at a certain time. When would that be?
Yes, ma'am. You're reading our watch list right there. McDonald's, Coca-Cola, Walmart, these staples are here to stay. And companies like that are good for two reasons. Number one, if you want steady income, it's got great cash flow, it's going to continue to pay a good dividend, and over time, you're going to see capital appreciation. But if you're this person that maybe holds cash for the next 6 to 12 months, waits for the pullback, that's a perfect time to buy that for not only the same dividend yield, but the capital appreciation that follows. Again, it's all about your plan in 2025. This is no time to be chasing returns. Get very serious about what you need this money to do. If income is king for you, these names are good no matter where you're at in the market.
Look, I know you're working with a lot of people for wealth management, for their retirement. They must be asking you about Bitcoin. I mean, we're seeing Bitcoin jumping today or ahead of this weekend, long weekend, right? We're not here on Monday. So is this something that sometimes fits into a portfolio, in your opinion?
It certainly is. And this is in pieces, again, according to your plan. I think if you've got some money that you can consider maybe casino money, that you want to take a gamble on something, Bitcoin is not a bad place for a little bit of your portfolio. I'd be careful getting over that 1 or 2% of the total portfolio. But I think Bitcoin has some upside. Now, I'll tell you, for our clients, we're not a buyer at 100, but at 100,000. But if it pulls back to 75 or 65, we would be all over Bitcoin for someone who doesn't currently own that right now. Bitcoin is volatile, and if you go into it, be prepared that that money is not money you're running to just for normal everyday or every month expenses.
And then the big picture, I mean, we've gotten in a lot of economic reports already, inflation and jobs and things like that over the last few weeks. Big picture, is 2025 a winning year, even though it'll have some volatility?
Nicole, I think we finished 2025 in the green. I think we're positive at the end of 25. This correction is healthy. 10 to 15%, I consider that a healthy correction in a market. But what we've got to watch is, does this $7 trillion that's on the sideline right now flood into the equity market? If that happens, 2025 finishes higher.
Yeah.
If that $7 trillion sets and we have investors sell, of course, moving perhaps to cash, we could see a little bit of a prolonged downturn. And my prediction for 2025 being stronger would be wrong. But here's what I can tell you. I am very keen on predicting 4 years from now, America is stronger. The U.S. dollar, the petrodollar, is the standard of the world. I believe that we've got our debt crisis at least somewhat under control. That's in a rosy picture. And I believe that the American economy comes out a lot stronger, and you want to be a part of it.
Well, I think everybody would like for that to happen. Bipartisan, everybody would like to see a strong economy and everyone doing well. Dale Smothers, thank you so much. And of course, the U.S. dollar as the world's reserve.